Australia has just gone through one of the most incredible boom property years in Australian history. Many of Australia's capital cities have gone up by as much as 20%, with some going up over 25%. Now, as we all know, boom times and 20% growth years can't last forever, which is why we think it's so important to share some of the information that we've seen from the Australian Financial Review, Commonwealth Bank and Reserve Bank of Australia in the last weeks to help you know what's coming in 2022, 2023 and how you can safely prepare for it as well as take advantage of it.
So as always, to understand what's going to happen in the future, it really does help to see what's happened in the past. So why don't you talk us through what's happened in most of these metro markets over the last 12 months and why this has sort of occurred?
You know, the first thing that's happened, well done all of you guys that own property out there, is everybody's made money. And that always feels good, right? It always, you know, it's beautiful to make money while we sleep.
Pat yourself on the back if you're in.
So, you know, it's been tricky for those people that aren't in, but for many Australians that are already in investment properties or their own home, they've done very well. Now, where this has all come from is the Australian government's made money relatively easy to grab over the last couple of years, plus record low interest rates. Now, that off the back of so many people sitting at home, saving money, stacking cash, has resulted in almost like a frenzy where everybody from Australia has just come into the market at the same time. And as a result of that, plus all of the Australians that came back from overseas, property prices have exploded.
And I think it's important to recognise the fact that this is an outlier year. A 20% growth year in property prices is very uncommon. When we looked back over the last 50 years from 1976 through to 2016, in all of the capital cities, there was only maximum 8 years in Brisbane where they recorded more than 20% growth years, and the rest were even below that as well. So it was a very outlier year the last 12 months.
You know, so what's happening now is these booms, like I said, cannot last forever. And so two things are happening. One, the Reserve Bank of Australia, as the economy's starting to go better, is starting to look at increasing the cash rate, which means the money that the banks borrow and the institutions borrow, that then they lend back to you, is going to be more expensive. So effectively, mine and your interest rates should definitely go up over the coming years. The other thing that's happening as well is because a lot of people have made money, more and more properties are coming onto the market. So where there's been this absolute undersupply of properties for sale, now there's more properties. So the combination of those things in terms of APRA making it a little bit harder to borrow money, the Reserve Bank increasing interest rates and more stock coming on means that there's going to be slightly less demand than there has been, and particularly for those big markets, your Sydneys, your Melbournes, that have already gone up 70% in the last decade. What normally happens is as that demand recoils, like it did in 17 to 19 in Sydney and Melbourne, we might see prices actually come back a bit by as much as 10, even 12% according to CBA.
So obviously the RBA wasn't going to keep their cash rate sitting at 0.1%, which is where it's at right now. Absolute record low. Now, CBAs actually indicated that they believe that this cash rate is going to be sitting at 1.25% by Q3 of 2023. And CBAs actually come out with their predictions between now and then. So why don't we break it down?
Yeah, so the good news is, guys, nothing's going to happen immediately. Like Commonwealth Bank and many of the other financial institutions in Australia see 2022 being another good year, particularly for those markets, because we've got to remember that Sydney, Melbourne and Hobart, maybe Canberra, are at very, very different stages of the cycle because they've had such good growth over the last 5 or 10 years compared to your Adelaides, your Brisbanes, your Perths. So when I think about the market, according to these guys, all of them are expecting an okay year in 2022. And then as that interest rate starts to increase as we get towards the end of 2023, that's when they're expecting, you know, the top to taper off. And it's completely natural for this to happen, you know. Like generally what happens is we get hysterical like we sort of have. People pay a bit too much. And I know some of you guys in Sydney and Melbourne know what I'm talking about and have seen it lately. Pay a bit too much at the top like people did in 2018. We get a bit of a peel back, but the great news is Australia is not one property market, and so we see 2023 particularly being an incredibly good year for those smart investors that can take advantage of sentiment like the investors did in 2020 and pick up those properties in the right markets at the right time for the right prices.
And I think it's important to look at that time back from 2017 to the middle of 2019 where we saw those declines, because it was heavily concentrated in Sydney and Melbourne. But you saw markets like Hobart perform extremely well through that. So it is good to recognise that Sydney and Melbourne control a large portion of the Australian property market, but the Australian property market isn't just one market.
You know, what we're all recognising is, you know, Sydney and Melbourne in terms of affordability based on current incomes are getting to that point where from an Australian perspective, they are extremely unaffordable. Now, I spoke to a couple yesterday in Bondi Beach. They bought a unit there for 800 or 900K in 2018. It's now worth like 1.2 million bucks. They're earning great money, like 250 grand a year combined. They were looking at houses in Sydney and they're like, there's just absolutely no chance, even with that income, for them to be able to get in, which is why they're thinking about moving to Southeast Queensland in a couple of years.
Yeah, so I think that's really important to recognise, you know, that affordability is going to impact, and as those interest rates come up in those more expensive locations, it's going to become a little bit tough to make those interest repayments.
So in terms of what to do from here, I think it's really important to sit down with your accountant or your financial advisor and figure out your position. You know, I'm definitely starting to put a little bit more cash away to not just protect myself, but also to take advantage of whatever comes up. As always, Simon and I have absolutely no idea what's going to happen in the future. This is just some information we wanted to bring to you early. What I think is, now that the media cycle's rolling out of the COVID scare thing, it's going to start moving into freaking everybody about property, and I think you're going to start to hear more and more of this message come through the mainstream media soon. It's just what you do with that information, and really there's two things. There is, you know, just sit tight for a while, chill out, save some money, enjoy your lifestyle, or get educated about it and decide what's best for you or your family, because Simon and I think long-term with our investments. We think about cash flow. We think about markets that have yet to perform and suburbs within those markets that have yet to perform in the last 10 years. And we think about a 20, 30-year time frame. So I've just personally picked up a property with my wife on the weekend. Now, the reason I did that, I'm so excited, is because I have a 30-year vision for that property. But I think it's one of those times, if you're trying to speculate short-term, the risk far outweighs the reward at the moment. So make sure you stay safe, make sure you keep getting educated, and as we see the market move and we get more information, we'll bring it to you as quickly as we can.
Sweaty, so sweaty. Oh, that's good.